We have 120 crores, 1.8 crore demat accounts, we are talking about 1.5% penetration. So technology has not increased the pie of the game. It has increased the convenience for the people who are already in the pie. But one more point is that after technology came, the screen-based trading came, because earlier it used to be outcry system. That has made a hell loads of difference. Hell loads of difference. I think if India has come into the global radar of the scheme of things in the capital markets, it's simply because of the screen-based trading. And moreover, considering US kind of country has only 50% market share in the screen-based trading and 50% outcry, we have come out into this 100%. And moreover, demat accounts. Earlier it used to be physical trading, always missing of the certificates and dividend not coming, etc., etc. Now it's a click of button, you have everything at your disposal. Technology has made a lot of difference, but a big complaint is that it has not brought the customers to us.
If you could share your experience at Diwan Housing, how has technology made things different, let's say over the last few years?
Okay. What we are looking at is how effectively use technology to basically reduce or bring the more efficiency on the processing side. That is where our major technology is concentrated. Here basically we are also looking at how well we are integrated our technology, our technology platform with our service provider, be it at the origination point or be it at the processing part or at the customer point, customer service point. Now customer service point, I'm referring how my system is integrated with my collection or my recovery agency, or on a processing part, how my system is integrated with my field servicing service provider, or I am saying how my system is integrated with the credit bureau, or on origination side, how well my system is integrated with my lead generator, or I am saying where the reseller of my product. That is where we are using our technology.
But sir, if I could come to you, because I mean it's always said, the perception is that of course nationalized banks have been late movers on technology. What has your experience been in the last few years?
I do admit that we are late movers, but at the same time I would like to tell you that I am from Union Bank of India. We are the first largest bank adopted the core banking solutions in the entire banking industry. And this has really helped us to offer quick, efficient service to the customers, and this provided a rapid market growth for us. For example, alternative delivery channels, we have grown from earlier, 3 years back, only 6%. You are correct, we are late. But today, we are at 52%. We are aiming to achieve 65%. Products, whatever we are giving, we are offering through the utilizing the IT technology. For example, I'm in retail banking department. For educational loan, online application is there. Sanction he gets online. Home loan, we get online sanctions.
What about you, sir? I mean, the insurance sector and the experience.
If you ask me, there are three perspectives which we look at IT. One is the consolidation and stabilization of the existing operations. Moving from the legacy software into a advanced software, bringing in efficiencies, bringing in more agility to the operations. Second part is reaching out, because of the growth has to be, there is a huge market out there. The penetration of non-life insurance is quite low in the country. There's a huge market out there. But we are not going to expand in terms of officers or number of resources dramatically. The reach has to come from IT. It is, the driver would be IT-enabled services, which would include online products like travel products and motor products. That's the second part of it. Third is, I would say, managing the huge data that is getting generated. We sit on a huge mine. We generate data like customer profile, customer behavior, accidents, the claims, the probability of accidents, and to the catastrophic losses. A huge data is generated every day. To take the data, manage the data, and understand, make it meaningful, and so that it can drive our decisions, drive our strategies in the future. I think these are the three aspects from non-life insurance side that we are looking at IT now.
What has been the change that you've noticed, and the kind of products that you talk about?
What we bring on the table is a unified experience across all channels of communications for the banking industry, where a customer will get a unique and identified service levels, defined, preset, and he will experience it across all channels. The fact is that anybody on a social medium communication, 15 58% of the people who tweet or express the opinions want a response back, and we are not aware of it. So what Aspect does is enable all these responses within the existing systems within the organization. So if an organization has set up a unified communication setup, Aspect enables on the same setup to respond back to the social media communications.
Sir, and now you've heard a cross-section of views from different BFSI service providers. Just your experience, and you've been on the financial side as well, where we stand right now.
You know, the diversity of thoughts on the level of technology adoption that has happened within banking, there is obviously a sense of, I wouldn't say complacence, but I think sense of confidence that we today have the technology enablers that has allowed a significant, rather exponential growth of utilization of financial services and banking, whether in liability services like new account opening or in asset services like credit cards, loans, mortgage products, etc. But I think we have yet to discover and conquer a wide number of new frontiers. I think the tier 2, tier 3 cities, the access into the rural hinterland, as well as making sure that our schemes like financial inclusion, either through banking correspondents or through a non-banking route, which is the route of microfinancial services, etc., really takes a leap forward and starts encompassing a wider array of our citizens to leverage these services, including microinsurance, is extremely important, and I believe that telecom companies have a significant role to play. But more importantly, for banks to reach out to its remote rural branches, connect them and make sure that all of the services that are there are available, makes for a great case for us to be of human service to all the institutions that are there in the banking and financial services space.
How would you describe what you heard today from the Indian Finance Minister?
Budget deficit projections are realistic.
Are you convinced about the numbers that are being presented?
Most of the other numbers look realistic.
Everyone has a summit to conquer, but the road is not always easy. For 27 years, we have found ways to give everyone an equal opportunity to participate, because a fair chance is everyone's birthright. When we say we change rules to change lives, we mean it. DHFL, changing rules, changing lives.
अरे तेरे पास Reliance Net Connect dongle है?
Get lightning fast speed at ₹1199. Also get McAfee antivirus free.
Reliance.
Oh, I can do magic.
Turn on a greener planet with General Air Conditioners.
Through the emergence of Consumer 2.0, Aspect's next-generation customer contact solutions extend customer conversations beyond the contact center, making interactions visible across the organization. Aspect brings together Microsoft technologies with multi-channel interaction management and workforce optimization to enrich these interactions. We tailor our solution to meet the unique needs of your contact center, so you can achieve better business results. Aspect, where Consumer 2.0 meets Enterprise 2.0.
While internet banking, the moment you open a bank account, you'll be given your internet banking password.
Yes.
But is it a conscious thing that mobile banking has not been pushed to that extent, or do you think it's a subconscious thing, it'll take its own time and it'll arrive in due course?
In Union Bank of India, we have given mobile banking facilities to them, and you just wait for 2 years. You will see we will overcome that also. It is not a great thing. We Indians, we are very strong. We adopt things. We assume things immediately after once we embrace it, and it will happen. It's a time, that's all. As he rightly said, the devices carrying that type of facilities limited, or the class people who are having this, they have got other alternative channels of using. That's why they are not using. At least once this comes, it will be adopted and they will embrace it definitely.
Actually, we are looking at this mobile on a different perspective. So, for example, our policies are all 1-year policies. You get to renew it, and you either don't renew it with us or renew it with some other insurance company. The whole challenge is how to lock you in, how to have that kind of a loyalty from each of the customers. So we now are trying to think that mobile could be the solution, because suppose I send you an SMS saying that your policy is coming up for renewal. That means either you will ignore it or you will just not bother about it until it is already expired. If I have some kind of technology by which you send press some buttons and here,
press here, it will be renewed instantly.
Most probably I will retain that customer.
Yes.
It's most probably I would retain that customer. So now I understand, as he has pointed out, this technology is now currently available. Some kind of transaction which can be triggered from an SMS, ending up in a payment. That would be a huge driver of retention of business in non-life industry.
How is 3G changing the landscape? And then there's 3G and there's already talk of 4G.
Sure.
So just from understanding the basic technology point of view, how is that expected to change?
So 3G essentially is a technology which allows for higher data bandwidth usage. And in fact, the device on 3G which is most popular is a USB-based dongle which is allowed to connect to internet. So the adoption of 3G services in India has been fairly challenged. And also, in the factors known to bankers more than anybody else, the kind of investments that most telecom companies have made in acquiring licenses for 3G and then having done the rollout, for them to find an economical price point at which to price these services and make viable business case is becoming increasingly difficult. So what is happening essentially is that the rollout of 3G services is getting restricted to metros and is not really hitting the hinterland where there is real demand for these data services. So the internet penetration or broadband penetration as is being spoken about, and 3G is nothing but wireless broadband, that is not going beyond the horizons of urban areas. And the real advantage of these services will start accruing both to the economy and to the banking sector and to the telecom sector once the proliferation increases and reaches to a level where a large user base sort of comes in and a critical mass is obtained.
And Mr. Prasad, when we speak of that in the banking context, the point being made that banking needs to reach out, whether it's microfinance or moving towards the rural hinterland as well. It's nice to say that technology can play a big role, but as a banker, do you think it can really play that role?
Yes, madam. Through the handset devices, we are able to complete this financial inclusion. We could open within 1 month 95 lakhs accounts through this banking correspondence, and these hand devices, they are very comfortable. They are using in the remote villages. This technology has helped us to a greater extent in meeting these financial inclusions.
Okay, so just to broaden this debate to level 2.0, and I'd like to get the panel's thoughts on this. And I think one of our earlier speakers actually mentioned this, that there's a lot of similarity between the documentation required in opening a bank account and in getting a mobile phone connection. If you actually extend that, again, the documentation required in buying an insurance policy, in going to an AMC to manage your funds, in opening a demat account, there is so much of commonality, yet continuous repetition of the whole documentation process. Is it even feasible to think of some kind of a linked common grand database?
The challenge in India, and that's the level of maturity or the next level of evolution that has to happen, is on the regulation front. Today, Reserve Bank of India regulates banks, IRDA regulates insurance companies, Telecom Regulatory Authority regulates telecom companies, brokerages are regulated by SEBI, and all of these regulators are not regulated by any super regulator that regulates them all. So, you're really depending on finance ministry to take that pole position and say that all of these regulators will have. And while there is a forum that allows all of these regulators to exchange notes, the level of evolution and agreeing on common standards, whether for things like KYC or for information exchange, is fairly limited. But the point that you're bringing out is absolutely valid. That has to be the future direction. And I think as this evolution happens and there is a mutual trust and faith that starts developing in having common standards of information and common databases of information, you will see that IT and technology and systems integration companies, including telecom companies, will come forward with such robust technology platforms which will allow leveraging of somebody's UID linked to all of this information and allowing for proliferation of services.
Indeed, the technology agenda of BFSI companies is moving in line with their overall growth objective. More on that after the break.
government may bring indirect transfers under tax retrospectively. Now that's the big story.
The government will try and bring in a provision perhaps in the budget which would capture Vodafone-like tax cases.
We have breaking news right here for you, and this is what we are picking up as far as the fiscal deficit number is concerned.
Mainly on account of subsidies has pushed the fiscal deficit to 5.9%.
The government may cut the withholding tax on ECPs, which is currently 20%. That could come down to 5%.
We're expecting that we could possibly have some kind of a cut in terms of the import duty.
There could be a likely cut in STT.
Reduction in the securities transaction tax by 20% from 0.125% to 0.1%.
Presented by State Bank of India, the banker to every Indian. In association with Binani Cement for generations to come and IBM, let's build a smarter planet. Exchange partner BSE, experience the new.
Complete your breakfast with Tropicana 100%. No added sugar, no added preservatives. Only the goodness of 9 fruit nutrients to make sure nutrition always wins. Tropicana 100%. Now, breakfast shall win.
Before you realize, your loved ones will grow. What about your money? For incredible investment opportunities, talk to FMC. Moneywise, be wise.
As India embarks on its new fiscal year, questions still linger about the new budget and its impact on India's economic future. Reliance Mutual Fund and Bloomberg UTV present Budget Economics and the Investor.
Take advantage of these special events where India's biggest market experts demystify the union budget for your investments.
This March, only on Bloomberg UTV. Presented by Reliance Mutual Fund. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Print partner for Delhi, Jagran City Plus, a Bloomberg UTV Pulse initiative.
She is the first Grandmaster from India and the first sportsperson to get the Padma Vibhushan. According to wisdom, he is one of the greatest batsmen to walk on a pitch. She has won a record 27 Filmfares, 2 Oscars, 2 Grammys, 1 Golden Globe, 4 national and countless international awards. When their loved ones dreamt of becoming the best, they dreamt the same. Union Bank of India, because your dreams are not yours alone.
MCX presents Bloomberg UTV Financial Leadership Awards 2012. The final word in money.
Presented by MCX, Knowledge Partner, ICRA, Hospitality Partner, Taj Lands End, Mumbai.
Today, banks have sufficient funds. If you have a good project, I don't think financing should be a problem. The risk that you are running, as far as you as an entrepreneur is concerned, or me as a banker is concerned, the two risks can run one over the other. Successful entrepreneurs I have seen are the ones who have connected to knowledge resources outside their country.
Presented by State Bank of India, the banker to every Indian. And SBI for SME. Knowledge partner, CRISIL Ratings. Print partner, Jagran City Plus.
Despite revised growth projections, the BFSI or banking, financial services and insurance sector did well to secure decent growth. This was the key theme of the 4th edition of the DNB's India's Leading BFSI Companies 2011. The publication highlights some important achievements for the sector. Aggregate loans and advances of scheduled commercial banks grew almost 23% over fiscal year 2010. Of the scheduled commercial banks, public sector banks had the highest share of 77% in total bank credit, whereas foreign banks had the lowest share of 4.6%. The report noted a marked improvement in the asset quality of banking. As for mutual fund schemes, debt-oriented schemes were clear favorites with 49% market share, whereas the equity-oriented schemes were second preferred option with 33% share. Life insurance sector recorded a growth of close to 10% in premium income, while the general insurance sector registered a robust 23% growth. The fourth edition of India's leading BFSI companies profiles 238 companies comprising leading banks, broking houses, non-banking financial services, mutual fund and insurance companies. Earlier, speaking during the launch of the publication, experts shared their perspectives and insights on the performance and emerging trends for the BFSI sector amid present economic environment.
With the growth in the most advanced economies remaining fragile, the global economy is undergoing another rocky phase. The Indian economy has also been affected in the form of the widening of the current account deficit, outflow of foreign funds, volatility in the stock markets, and the sharp depreciation of the rupee. Nonetheless, the recent moderation in the inflation, especially food inflation, will provide space, hopefully, for the Reserve Bank of India to lower interest rates, which in turn will boost investment as well as industrial activity. Needless to say, the services sector will be a key driver in this recovery, and the banking and financial services sector will play an absolutely vital role in driving that growth. Bank credit of scheduled commercial banks as a percentage of GDP has grown considerably. It was only 37% of GDP in financial year 2005. Today, that same number in financial year 2011 stood at 53.9%. The life insurance industry has clocked a 5-year compounded annual growth rate of 17% from the financial year 2007 to the financial year 2011 in total premium. So a CAGR of 17% in growth in total premium over the last 4 years.
Inflation does not seem to be a concern, even though the central banks are injecting so much of liquidity that almost at zero interest rates in the international economy. I think main reason is not that there is all, except for Japan, perhaps everywhere else inflation is positive, but they are more concerned about deflation than inflation, and inflationary expectations are well anchored in these countries, and that's the reason why they can have such accommodative monetary policies. However, the fundamentals have not really improved, particularly given the lack of a comprehensive growth strategy. Even in the G20 communique that we had a day ago, it does say that the international economic environment has continued to be characterized by an uneven performance with weak growth in advanced economies and a stronger but slowing growth in emerging markets. As far as the Indian financial system is concerned, it has been resilient in the face of both external shocks and domestic macroeconomic environment. The Reserve Bank, continuously looks at the systemic risks and what even others think of it. And in fact, for the first time in October-November 2011, the Reserve Bank instituted a systemic risk survey, and with a view to gauge perceptions of market participants and other stakeholders, not just the financial sector, about the key risks to the Indian financial system. The majority of the respondents identified deterioration in the asset quality of banks as the most significant risk to the financial system, followed by risk from heightened market volatility, including exchange rate volatility, the global risk, then risk of high inflation in India and the high interest rates. But the survey also revealed that there's greater confidence in the stability of the Indian financial system as compared to the global financial system.
I think the biggest challenge which the country has accepted through the banking industry is the financial inclusion. And all of us know that out of 120 crores population, it's hardly about 40 to 45% population which is really availing the banking facilities. The rest all are really deprived of, and the real challenge for the bankers, the BFSI industry and the technology put together to reach to this deprived 55 to 60% of the Indians. And I think the efforts which have gone through by systematic identification and putting in place the various model of business facilitator, business correspondents, engaging technology partners, identifying the villages for the population of 2,000 and above, where the brick and mortar branches are not there. The banks have been able to probably reach there today, at least by enrolling those households, giving them smart cards that look here, you can do the banking here. But the real challenge is that probably all of us have done only a tip of the iceberg business. You have to really see that the business correspondent agents as an institution is really built up in the country, who could really serve 6 lakh villages and take the banking, insurance, everything to that.
The core essence for any banking sector to grow beyond the conventional spaces is the connectivity. And second, the kind of applications that you can run on various medium. And third, it has to be secure. We need to enable alternate channels to increase the adoption of the banking services. Today, the services, the volume of transactions is not uniform for any of our industry partners, whether it is banking or especially when it comes to insurance sector. While telecom and banking sector is partnering so well from the technology enablement point of view, but I also see the way the regulatory system that is driving the telecom adoption in the country. Today, when we look at the mobile adoption, the number of mobile connections in the country, it is at least 3 times the debit cards. When mobile has reached to such far extent, can we leverage that to achieve some of the objectives that the BFSI sector has? Today, when you take the mobile connections, as I mentioned, the regulatory aspects, when you buy a connection, and similarly when you need a banking account, there is certain commonality. Can we leverage that? When you have the entire bank account through the debit card, he doesn't have the flexibility to allocate his funds for various usage. I think that is worth exploring, and that's possible today. So that's something I would like to leave the thought here.